Levy to collect tax on investment, quote, profit, end quote. How to stop it. First, change your mind. Resolving an IRS threat to levy, or when the IRS actually issues a levy to collect on a investment, quote, profit, end quote, may be easier to resolve than you think. People receive IRS notices demanding that they pay additional tax based on profits that they know nothing about. Commonly, the IRS issues these demands long after the tax return had been filed, and it bases its decision on financial information it received, but which was not reported on your return. Commonly, the amount of the additional tax as demanded is so large it overwhelms and stymies you, the recipient, into submission. This is particularly true for retirees and other people who live on a fixed income. If this describes you or someone in your family, and the IRS is threatened or has already levied to collect what it demands, understand that the profit the IRS is taxing may not be accurate at all, and in many cases, it may be wrong altogether. So yes, the IRS levy should motivate you to address the problem, but you should also be able to do so with confidence once you understand a basic principle about the IRS taxes on investment, quote, profits, end quote. First, understand that the IRS receives information from investment and real estate brokers all the time. If you don't report those transactions on your income tax return, it will use the information it receives from those sources to assess additional tax against you. The problem is, the IRS taxes you based on the gross income information it received. In other words, it doesn't take into account the amount you invested or any other matters, expenses in other words, that would reduce the, quote, profit, end quote, it says that you made. Then the IRS figures the amount of tax you owe and adds penalties and interest to the entirety. That's why it looks like a mountain of money, and that's why it overwhelms and stymies people. That's what happened to Myrtle, and that's why she needed help. She needed to turn to somebody to help her look at the information from the broker, to understand more accurately what the IRS received and why the IRS misunderstood that disclosure. Instead of Myrtle having income from her investments, as the IRS thought, the truth was that she actually had losses. The broker firm had only informed the IRS about the gross value of the stock sale, and the IRS didn't look for anything more. In other words, it didn't take into account that it probably cost something to buy the stock. This is the way that the broker industry commonly reports information to the IRS. It's also the way that the real estate industry commonly reports information to the IRS. It's then up to you, the taxpayer, to advise and inform the IRS about your actual costs. So Myrtle and her daughter immediately contacted the IRS before the collection machine really got into gear. They submitted an amended federal income tax return for the year that reported she had actually had losses greater than originally understood. She was instead entitled to a refund. And this is not uncommon, especially since the collapse of the stock market. Keep in mind, if you have received a final demand letter from the IRS, you're entitled to a collection due process hearing. And filing your request on time gets you to have appeals consider the legitimacy of the underlying debt. Even if you miss the date to file a collection due process hearing, you may still be able to file an equivalency hearing and accomplish the same goals. In either case, turn to Digital Tax Attorney's set IRS Appeals for more detail. Now, if the IRS has already levied you, call the IRS number on the levy and work through the process with them. Usually, they will do that with you. Stress that the levy is based on an inaccurate tax amount, which is based on inaccurate information, and that you're ready to file your amended return, and that you may have actually a financial hardship. If they resist you, consider filing a collection appeal or a CAP request. And information about that is also in the Digital Tax Attorney set, IRS Appeals. Remember, if you're entitled to relief from an IRS levy, you must act for yourself. The IRS won't do it for you. Your bank will not do it for you. Your investment broker will not do it for you. And your employer will not do it for you. If you're not entitled to full relief of the IRS levy, you could still be entitled to a partial release. And, as the old saying goes, you have to defend yourself. Remember, go slow and understand your problem as completely as possible. Look at all the communications that you receive from the IRS. Look at your transcript. Get it. Review it. If you have a tax delinquency for any period, the information will be there. And if the IRS sent you notices, letters advising you of your rights, that information is going to be there too. If it happened. If the information is not there, it didn't happen, and the IRS could be wrong. Thank you.